It's okay to make a mistake. If you have an opinion about, okay, Michael's saying, watch this level here, and he's pointing out something below the marketplace. Okay. So is it showing me anything in there that would lead to a trade? If you don't see it and price moves, you'll go back and find it in hindsight, and that's still learning. But you don't want to be pushing a button thinking you understand what I might be hinting at when I'm not hinting at anything. I'm just telling you, watch this level here, note this here. These are areas I'm watching on my own chart. I am not putting things out there that are ambiguous, that mean nothing. I'm drawing your attention to the very specific things that I'm utilizing to determine a bias within a narrative. The first 30 minutes, if I don't know right away what it's going to do, I'm submitting myself to that first 30 minutes myself. I'm doing that. But if I have an inclination that it's going to do a specific thing, run for a liquidity, run for an imbalance, then I'm going to go right in there. And as soon as it does it, if it's in the first 30 minutes, I'm in there. I'm doing the trade. But we have a large range day yesterday, and everybody's going to want to do what? Jump on board. So the market will, most times, not always, most times, reach for some measure of buy side. Why? Because if it's going to go down, like I said yesterday, it can go up the purge buy side to allow smart money to assume shorts against that buy side liquidity. I was offering the market the opportunity to present to me and you by highlighting that 4020.75 and 4024 levels. If it doesn't reach there and you're in the first 30 minutes, nothing has happened. I gave you 3 specific PD arrays to watch and observe. You know, if you've been paying attention and taking notes, for the folks that know I've said this, do me a favor and tweet to me. Yes, you have said if 3 PD arrays fail, that's problematic on a bias or a directional view on price, and it's going to most likely go the other direction. If you know I've said that, please tweet that and say you've heard me say that, because I know I have. I haven't just said it one time. I've said it multiple times. But if I say order block or fair value gap or volume imbalance, if you're here to find something to talk about that didn't happen correctly, you're going to have a whole lot of opportunity to do that erroneously. Not everything I'm referring to is an entry. They're measuring points, balance points, points of reference. That way we see what is the ebb and flow of price. Is it respecting this level? Is it not respecting it? If it goes through it with a lot of speed and magnitude, that is also a characteristic that is important. When we had price return back to that fair value gap at the 9 minute after 10 candle, 1 minute ES, came all the way back up, touched the bearish order block, spent about 4 or 5 candles in there, and then repriced lower, then made the lower low. As it was dropping, I said that we want to see it go through the fair value gap from 650 time candle, and then offer, if it comes back to it, resistance. Now it went through the initial low at 1015. So once it takes out that low, we're not interested in seeing it return back to that fair value gap then, because we've expanded and made another lower low. So there's no need for it to come back to that fair value gap that's formed on the 650 candle. To come back to that level is problematic, which is why I said that hypothetically your stop loss on this idea would be 4000.5 or 4,001/2 of a point, to which it returned back to, but not before trading to 39.91 to offer a partial near the low. So 50% of the trade idea that you're logging, you may not have seen the setup, but you know the logic I'm talking about because I'm mentioning it in the tweets. Once everything's done, you take that information, go back into the chart, and you study. What do you see? What is it you see? For some of you, you're going to see the consequent encroachment of the low in the candle formed at 9:30. 9:38 rather, sorry. And the market trades up into that fair value gap I mentioned, around the 4,007 level is what it is price-wise, but the actual candle for the fair value gap is at 5 minutes after 7. Some of you may see that retracement back into the fair value gap after it made the lower low. That's your optimal trade entry. Leaving the range of that first 30 minutes. Not expecting it to come back into it. It doesn't need to. It's done its work by staying in the upper half of it and then failing to go to buy side. It ran out below the low. Okay, so what does that tell us? From a narrative stance, it says it's going to be seeking discount. Price will explore going lower into inefficiencies that are below market price, which is why I took your attention to the candle at 650. That's your fair value gap that was below price. And then the old low. And then once we went through them, 50% of the trade comes off. Why? Why? Because it could go down and take the low, make a lower low, put people on the wrong side selling short on a breakout, and then come all the way back up against the entirety of the daily range. It just so happens it retraces back up into that fair value gap formed at the 9 minute or 10 or 10:09 candle time wise, trading back up into the 4,005 level essentially, and then repricing lower to make a lower low. So now we had 2 times making a lower low. Why did I say 39.91 and I think it was 3/4? If you measure the low of 39.95.50, which was the initial low of the day, and the 39.88 level, which is the top of the next new week opening gap that I gave you yesterday, below the market price. Midway between that, you get 39.91 and 3/4 or 0.75. And as price was reaching down into it, I tweeted you would screenshot this right here, noting that your partial would be there. And then you'd have a limit order sitting at 39.88.25, which would allow for what? 39.88. Even if it traded to that, the buy limit order would trigger, and that would collapse the trade. But because we had what? 2 stages of offset distribution, that means the market rallied above the buy side above 40.15. Those highs at 840. Looking at your 1 minute chart, look at the bottom of the chart at 08:45. Go straight up from there. Just to the right of that, you'll see there's relative equal highs on a 1 minute chart. That's a buy side liquidity pool there. The market rallied above that, but failed to get to 40.20.75. Spent the majority of the time in the first 30 minutes in the upper half of that range. What range? The opening range, which is the first 30 minutes of trading. If you don't have a hardline bias, if you don't know exactly what you're doing, you wait that first 30 minutes and you just let price tell you what it wants to do. You will not get into high of the day. You will not get into low of the day, and you don't fucking need to. You don't need to. I'm teaching you to do what? Find 5 handles first.